Hello, everyone. Hello, hello, hello. I can see you all streaming in. As you come in, please put in the comments whether you're watching from YouTube or Facebook. Put in the comments where you're tuning in from. We're so excited to have you here for the Money Check webinar series. We finally started, and this is episode 1. So this is going to be very exciting. We have 3 more episodes left to go. So do stay tuned. But if you have any comments or questions, again, put them in the comments and we will see them on this end. I am joined by amazing people today. But before that, I just want to welcome you to the Money Check webinar series that is brought to you by Arielle for Africa. We're very excited to have you here and we're very excited to have you on board. Like I've said, this is part 1 of the webinar series. So today we will be covering the reality behind financial literacy in Africa. What is the reality behind the numbers? Why are there such few of the African community or population that are financially literate? What is the truth behind the numbers that we see when we see certain percentages being published? What is the reality behind those numbers? And so I'm really excited because today we have amazing, amazing, amazing panelists, and they're joining us from really all over, and it's so exciting. I think I'll begin just by having a few introductions. My name is Edith Njage, and I am your moderator today. I am the CEO of Arielle for Africa, and if you don't know, now you know, Arielle for Africa is a social enterprise. We work with young people. Our major and #1 mandate is to ensure job creation in the African economy. And we do this in many different ways. #1, we work with entrepreneurs. So we upskill entrepreneurs, give them any skills, tools, funding, legal support, connections, and partnerships that they need to be successful. Each entrepreneur in our network is mentored for 5 years after the Arielle for Africa journey. #2, we work with corporate leaders. So what do I mean by corporate leaders? We work with the future C-suite for any franchise, small business, or business that is in the African continent. #3, we work with financial literacy, right? And we provide financial literacy programs. From next year, February 2021, you can expect to be going through our financial literacy programs that will be available every single month from February to December of 2021. But finally, we're just here to support young people, young talent, and have very, very important conversations. So today we have amazing panelists really covering all the corners. And I think I'll just begin with bringing them up here and then they can do a better introduction of themselves. First up, we have Robert Ochieng. Robert really is a big, big person in the financial literacy community. I've just pulled him up. And he's doing a lot of great work, but I'm going to let him talk about what he does. Robert, can you give the people a very good introduction on yourself? We're really excited to have you.
Thank you very much, Edith, for having me, and thank you everyone for joining. So basically, what I'm usually passionate about is just to help individuals and even organizations to be able to connect their finances with their goals, because each and every organization has a goal and a mission to achieve, but finances can cut short that goal. And even a country can lose its dignity if it doesn't manage its finances well. So for individuals, it is about what you love doing, what you want to do in this life, and your finances can help you achieve that goal. So I'm here and I'm a very, very huge fan of people just helping themselves and getting ahead in life with their finances. So we have a Facebook group that we run. It's called Young Nairobi Stock Exchange Investors. So it has 82,000 people, and there you can come and ask any questions on investments, and you'll be assisted by very, very experienced people in that community. So it's just about creating positive vibes on social media, because there are so many things that you can do out there, but you can also build yourself with this great opportunity that you have online in terms of different platforms. So that's what I do, and we'll continue interacting throughout this session.
Perfect. Thank you so much, so much, Robert. So that was Robert. But like I was saying, we have several panelists. So another panelist that I would love to introduce you to is Gladys Thuita. Gladys is actually the one who taught me finance a long time ago, but she'll talk all about herself. She is actually a lecturer at Riara University. She's also a PhD candidate, but she'll talk more about herself. Gladys, I'm adding you to the screen.
Okay, thank you very much, Edith, and welcome to you all. And welcome to you all. You have heard my name is Gladys Thuita. I teach accounting and finance in Riara University. I am trained in the area of accounting as well as finance. So I love doing that day to day because I've worked in the finance sector. I've worked in the accounting sector. So in all the areas pertaining to finances, I've worked. So when I joined Riara, my main goal or objective is to impact the knowledge that I have to my students so that they can as well go out there and become financial literate. That's what I usually tell them, become financial literate. Don't go out there, you do something that, like, for example, you take a loan and then don't invest. Or you have cash, you don't save. So that's what I teach them on daily basis. So I like doing that on daily basis. And I know I have impacted a number of students, including Edith and many other on the way. So thank you very much, Edith, for the welcome.
Thank you. Thank you. So happy to have you. And then finally, we have Amanuel. And Amanuel is actually an Eritrean living in the US. And he's really an amazing guy. He's a marketing director at WFG, but he's going to come up and tell us all about himself. Hi, Amanuel. It's good to see you. Good to have you on. Just tell the people everything about yourself, what you do, financial literacy, and your heart for finance.
Okay, thank you, Edith, and all other participants. My name is Amanuel Ghebremedhin, and thank you for having me on your platform. And if I'm going to talk about myself, as I told you, my name is Amanuel Ghebremedhin. I was born in Eritrea, capital of Asmara. And I migrated to the United States in 1972. I mean, in 2013. After that, I just landed in many jobs, and I was not able to see that as we visualize the United States, that when we are back home, we were just misled by the image that we see right here. So. After my arrival in the United States, it was a different image. Then I started to realize from day one that there must be something that I need to change to achieve my goal, because I migrated from my country for change. Then I landed in 9 jobs, but I don't see any promising things, so that I shifted to the finance and insurance industry. And now I think I can say Eureka, because I found a way I can help my community, I can change myself, and I can teach every especially a migrant from Africa to have a vision and to change their perspective towards achieving their goal. That's not to live by our grandfather's dream. We have to have our dream. That's my goal. So I'm on a mission to change the life of Africans, especially in diaspora, with my mentors, great mentors from West Africa, who are making a difference in this country. I lie on that mission, and I'm now fully just all in that mission to achieve our mission, changing our community for the better.
I love it. I love it. Thank you for joining us, Amanuel. We appreciate you. I think I'm just going to get straight into this conversation and just start it off. We have amazing panelists, like I just shared, and we are so excited as Arielle for Africa to be hosting this first episode for financial literacy and just creating a space of awareness. Like I said, feel free to leave any questions, comments, discussions in in the comment section. If you're on Facebook or on YouTube, that should be available if you're watching us on those two platforms. So now let's just get into this conversation. What is financial literacy? You know, we use that word, we apply it, we say financial literacy this or that. But what exactly is financial literacy? Well, this term can mean or cover a range of concepts, right? From financial products, financial institutions, concepts, the skills that you have in finance, the ability to calculate certain things, calculate your budget, calculate your interest rates, and just generally how you manage your money, how you plan your finances, how you handle what you have in your hand. And especially in a time like this, right, during a pandemic, it's interesting to see that financial management, money management is at the center of people's survival, essentially. And this has become a really key or issue that has been on the forefront of very many conversations. But before that, I think I just want to pull up the speakers so that they can each give us their definition of financial literacy. You know, we use that word. We say, okay, financial literacy, but then who is a financially literate person? In your own words, I think we'll start with Robert. Tell us, who is a financially literate person in your own words?
Okay, thank you very much. So financial literacy, over time, I've come to realize that actually some people want it to be called financial awareness, because if you tell them that they are financially illiterate, they feel bad. So, but over time and through interacting with so many people, I've come to look at it from 3 dimensions. So today will allow me to introduce you to 3 words. So first is the mindset. So just having a meeting with yourselves and deciding that this is what I want to do with my money. That money is something that you get after providing some kind of value, and you need it to sustain your life, to survive, to achieve your life goals. So deciding that that is what you need to do, and agreeing that money is important to you, because that's the only way through which you can attract money. But that's not enough, because still you need the skill set. You need to know what the financial markets are, what instruments are out there for you that can help you to achieve these goals that you have in your mind. And you need to know the things like compounding that can help you, and they can be like your silent life partners towards your journey. So the skill set is very important. Just knowing that, like bank accounts, what interest rates can I get from money market, the stock market, the risk level, that's important. So you find that most people, they have the right mindset. They can save as much as 10 million Kenya shillings. But tomorrow, a get rich quick scheme comes in and they dish it out. It means that they have the right mindset but the wrong skill set. And still, even if you have the right skill set, we are human beings and we have our weaknesses. You need to automate some of the things. So that one, I'll bring you the 3rd pillar known as the tool set. Can an automation like standing instruction help you? Can an accountability partner help you to achieve your goals so that you don't become lazy along the journey? So I believe that if you have those 3 pillars, you have the right mindset, you have the right skill set, and you have the tool sets, then you can call yourself financially aware or literate person.
I love it. I love it. And you're just giving us such good tips. Someone just needs to stitch that on a pillow or save it somewhere, because that is so insightful that there are actually steps to follow. It's not a one destination sort of journey. I really enjoy that. I like that. I think that's some really good advice. Let me add Gladys. Gladys, what do you, or who do you think a financially literate person is in your own words?
So thank you. So to me, I'll just talk about myself, and I will ask myself, when I get my salary at the end of the month, do I know how to budget? If I know how to budget for that salary, I'll look at a budget on 3 items only. How do I generate the money? Number 2, how do I spend? That is consumption. And number 3, how do I save? So if I'm capable of those 3 terms, I've seen you talking about the mindset, the attitude. You may earn only $1, but at the end of the day, you know how to spend it, you know how to save. So that is how you can talk about a financially literate person, a person who knows how to use the literature they have at their disposal. They have the knowledge. It doesn't matter how much they earn, but they have the knowledge to know that they can spend and the limit of how to spend. Number two, on the limit on how to save. And when they're talking about saving, do they know the avenues or the channels to which they need to save their cash or their finances? Yes. Yeah. Thank you.
I love that. Okay, let's hear what Amanuel has to say about the same issue.
Yeah, when it comes to the financial literacy, there are different parameters that we need, but in every area, there are three things that we need. First is the knowledge, then the other is the skill and the ability. And knowledge, you might have the knowledge, but unless we have the skill and the ability to apply it, it's not going to be working. It doesn't mean because you know the numbers, you are financially literate. So mostly financially literate, the person that we can say financially literate is the one who had the knowledge, the skill, the ability, and who can understand and effectively apply the rules of money, because we have rules of money, how money works, and how cash flows to you, as Gladys mentioned it. You have to know how cash is flowing to you, and you have to, when it comes to the business people, they have to read the financial statement, and they have to see how it's progressing. So budgeting is part of it, saving is part of it. In the area of investment, when it comes to the area of investment, you have to know how the rule works, how the monetary and the fiscal policies of countries work and affect the financial institutions and everything. So in that case, you can have the right way to build your wealth and ensure financial security. So that's the way I can see it.
I love it. I think all of the different panelists today are sharing with us information that is key or crucial to how we approach finance, to how we approach money. So nowhere there did I hear that a financially literate person needs a finance degree or a business degree or a mathematics degree. I didn't hear them mention that it needs to be a person of certain education standards or certain career standards. It's just what you're able to do with what you have and how you use certain tools, certain mindsets, certain perspectives and certain things at your disposal to make the most of what you have. So financial literacy is not something that that is selected, right? It's something that a person works toward every single day and makes sure that they're improving at every single day. Like I said, if you have any questions or concerns, put those in the comments and then we'll be able to have the panelists address those. So according to S&P's Global Financial Literacy Survey, because they did one, African countries actually score the worst in the whole world. African countries have the lowest financially literate percentages in terms of population. So let me actually put a number to this. Botswana has the highest financially literate percentage of group of people or population percentage in the whole continent at 51%. And you have Somalia at 15%. So that means the rest of Africa, we fall in between 51% and 15% of the population being financially literate. And like our speakers just shared, it doesn't mean that people have degrees or anything like that. No, it means that people are mindful of their money and they know how to handle their money and their finances. So I just want to understand, based on this, and I think, again, I'm just going to start with Robert. What does these statistics, what does this low percentage of people being financially literate mean for the growth of the African continent? Can we, like, how does that impact our growth, that such few people are financially literate?
Okay, first thing that I would like to say is that finance is actually the language of business or life. So if you see people sitting at a dinner table, a family sitting, they all have dreams and aspirations. From the 1-month-old baby to the father who is maybe the CEO of a corporate, or the mother who's an entrepreneur, the siblings who are in high school, they all have their dreams and aspirations. So financial literacy simply helps them to make better decisions that will drive them towards their life goals. So it simply means that if people are not financially literate, then they're not making the best decisions at family level, in their own lives, and even at corporate and country level. Because finance is the language of business. When you start a business, you actually have a certificate for that business to exist forever. But lack of finances can actually cut the life of that business short. And for human beings, it means that you want to be living the life that you desire. So financial literacy is important. And just allow me to quickly define the value chain of financial education or awareness, because people miss that a lot. So first, you need to do financial planning. Then after doing your financial planning and deciding that this is what I'm going to set apart, you need to know the wealth management aspects that are available in your country. Which instruments do you have? What is the time horizon of the investment that you are trying to do? You also need to have some level of risk management, whether it is using insurance products, so that you have a level of error that you can make in your life. You can use an emergency fund, for example, and so many things. You also need to look at debt management, because debt is actually something that can cripple your life and it can bring it down. Usually I say that your financial journey, you like for Edith, we can say the Edith personal finance empire. So the debt can bring Edith personal finance empire down. So it's very important to be aware of it. Something that you forget here in Africa is succession planning and estate administration, and no one is safe from it. It simply means that if this capital is wasted, then everyone is always going to start from scratch. Then we start blaming people from other continents for not funding our startups. It simply means that we are not saving for the future generations. So we have point A and B. Someone built a bridge so that when you're in Nairobi, you can get to Thika. Without that bridge, no one would ever get to Thika. So the current generation save for the tomorrow's generation, because a parent who saves, their children will have a level of luxury. They can start a business and the business will fail, it won't affect them much. They can go to a better school, and that's a better life for everyone. Then we have things like finance for couples. Couples need to be educated on finance, and even finance for kids. So the empire is big, and just one thing is enough to bring the empire down. If you don't teach your children about finances, that business that we work so hard for will come down. So it's very important. And even at country level, economy is just the aggregate decision that each and every one of the 50 million Kenyans make. So that's what we have. If it is everyone has got better decision making, then the economy will improve. So we are all in it, and we're all part of it.
I like that you mentioned kids, because this was a conversation that we had in the pre-series for this webinar series. So we had a few conversations with millennials, and they said that their perspective around finance would have been so different if, instead of their parents buying them toys or giving them money, in Sunday school, you're given money to go and give you, all these different things. If instead of all of those products that parents give their kids, if instead they were given, for example, a portfolio, right? And they're told, this is an investment for you. You are responsible of managing this. For example, from age 13, if I had a portfolio at age 13, I think right now I would be very, very far in terms of how I viewed stocks, how I viewed bonds, how I viewed investments, right? Because then it would have created that money management character that went beyond cash. So a lot of young people today, managing cash is one thing, but managing investment is a completely different discussion. And it's something that maybe we haven't yet inculcated into the younger generations. It's something that's for older, once you're already an adult and you've already started making your own investment. And by that time, it's a bit late for you to really jump on that bandwagon. So I like that you mentioned for kids as well. That's really, really important. Yeah. Yeah, perfect. Okay, so the next question that we have here, right, where I shared that we have financial literacy in Africa between 51% and 15%. I think now I'm just going to ask Gladys to just share with us, what do these statistics, right, where we're saying financial literacy is between 50 and 15%, what do these statistics have to do with unemployment, debt, and poverty in the continent?
So thank you very much. So first of all, when we talk about economic growth or economic development of any nation, it grows because of you and because of me. Yeah. So if I can't manage myself on how to be financially literate, then of course my country will lag behind. So for example, let's talk about unemployment. It's all about sometimes the mindset in you. So you have already done a degree, but just waiting to get a job that is related to your area of study. Yeah. So there's one guy who gave us a story that when he joined university, he started in fact, he's the pioneer of those who sell coffee around with small cups. Yeah, you've seen those guys. Yeah. So he started with 200 shillings. By the time he was leaving the university, he had more than 1 million. Doing that, he moved from that and to the eggs. So unemployment, of course, we are looking at a situation whereby we have the knowledge, we have been taught, by then most of us have even gone to school, we have been taught personal finance, but we don't put it into practice, of which we are capable of doing it. And that is why we'll be talking about unemployment on a daily basis. Because I'm a trained finance person. So then how can I go and sell mutumbas? How can I go and start selling fruits? So let's look at the debt that we are having in Kenya. So we all require to grow ourselves so that we can be able to pay taxes. So if you are not able to pay taxes, and yet the government is looking at us as the citizens to pay taxes, because from the taxes, the government will be able to offset all the debts they're having. So if we are not able to generate income from the few finances that we are having, then at the end of the day, are we able to pay taxes to the government? Of course, we'll not be able to pay our debts. And that is why our debts are standing at trillions and trillions of money, especially in Africa. We are having that problem. Look at the poverty. So majority of us in Africa, first, we live below, we are talking like $1.5 in a day. So look at the dollar and then look at the dependents who are next to you. Your children, you have your relatives, you have your parents, they're all looking upon you. So the question is, that dollar, can it sustain my spending as well as my saving? Can I be in a position to do that? So therefore, that's why in Africa, we'll always be talking about poverty. Why? Because first, it is in the mindset. It is the attitude that we have. Number two is that even the knowledge on even how to get out of that poverty, we do not know, because we are not knowledgeable. We don't have the income levels. And again, number three is that we don't even have what we refer as viable investments. So look at Africa. Generally, we talk about attracting and retaining investors. And in many cases, statistics have shown that Africa, we are so poor. Investors come, they leave. Within few years, they leave. Why? Because we don't know how to retain and even attract and retain them. And again, look at Africa, why we are lagging behind poverty. There's so much to do with even political instability. So who is in power? Is that person going to improve on the level of unemployment? So here we are talking about, like, all these ones goes around who is in power. And again, which party is in power. So in Africa, we are lagging behind financial literacy, not because even sometimes knowledge can contribute. But again, there are other variables that are attracting us to come to the circle, like even we don't have the knowledge. but we have it. The question is, do we have enough income?
Yeah.
Do we have the knowledge? etc.
Yeah.
Yes.
Yeah. And that's why conversations like these are so important, because very often we say that unemployment is something that is plaguing Africa. We say poverty is something that's plaguing Africa, but a lot of it is on the basis of our choices. So these are choices that were made 100 years ago, but choices that are still being made today by us, but then also by people in power, that are the reason why we are where we are today. And the best way to change it, like you've said, is to just start making different choices and to start with yourself. So me, I start with Edith. How am I managing what I have in my hand? How am I using the 200 shillings to become 1 million shillings down the line that will then go and make also an impact in the community? So I appreciate that comment and that feedback and that response. So now that we've started talking about this, I think we really just want to narrow in and see, is there a relationship, or is it direct or indirect? Is there a relationship between financial literacy and the level of development in a continent or in a country? So this can be either on a continental level or on a country level. And I want Amanuel to tell us if there's a relationship between the financial literacy of people, right, and the level of development of a country or a continent.
Yeah, of course, there is, as it was mentioned by Robert and Gladys, there is a direct correlation between financial literacy and continents or countries' development, because we can see it by different sides, just based on when it comes to individuals. If individuals are financially literate, it means they have proper saving and proper retirement plan, and there is a way that they can realistically assess their financial knowledge as consumers. So this contributes thus a more saving that could be turned to investment, so that the country can have enough resources to invest, so the cycle cannot be halted in a way that it can devastate the economy, because we are just we are fixing the cycle, because it starts from the income. If you are properly using your income, because saving comes after income deducted that lifestyle, we have the savings. So having that saving is the way that we can change it to investment, so that people can have employment, and then there must be there is consistency in the cycle of the economy. So individually, people, if they are financially literate, they can contribute to the development, because they are well equipped with those financial tools, so that they can have enough saving for which can provide the investment sector enough resources. On the other hand, when it comes to the financial system, it creates greater competition, because if people know their options, they can choose whatever is working for them effectively. Unless you don't have that opportunity, if you provide them with the opportunity, if we can provide them with the right knowledge, with the right field just to play with, that can be a great deal for the financial system to operate in a competitive way. So then, when it comes to community or the country as a whole, or the continent, there will be financial inclusion and understanding the government's financial policies. This is a holistic power just for the country to operate efficiently, so that the cycle cannot be broken in either way. And we see most of the economies just working in a healthy way because of that foundation. So I can see there is they are directly correlated, because if you have financially literate people, it's going to be supporting the economy in a positive way.
I like this. I like this. And I think, Amanuel, you're a very wise man, because there you've dropped a lot of nuggets of wisdom. But he's also started another conversation, because he mentioned government and he mentioned financial institutions. And I think here I really want to get, because Robert is in this space with financial institutions, I want to get your perspective, Robert. What responsibility exactly do financial institutions and governments have towards financial literacy? And do you think they are actually fulfilling this responsibility fully?
I think financial institutions and governments, what they need to do is to ensure that people are financially aware, so that we have a sustainable economy, because sustainability is important. I can give you a very good example in that if someone doesn't take care of their retirement, so we usually have this concept whereby we say that when you're working, then your productivity is very high. So that is human capital, which we call HC. But over time, when you get older, your HC or human capital will be very low. So you need your FC, which is financial capital, to take care of you. So if you don't make that decision to save for your retirement, then simply you are just relinquishing that duty to someone else, who will be your children or the government. So that you can just see how that one will reduce the productivity in an environment whereby one person is actually working for like 4 people in a family. And the data from Kenya National Bureau of Statistics say that we have about 16 to 17 million working Kenyans out of the 47 million. So you can see now what is happening. So one person is working for approximately 3 people. So it simply means that we need to look at our education curriculum and have a national financial literacy program. Because currently it is possible to graduate with PhD in Kenya, be very knowledgeable, and know nothing, not even a single sentence on financial education. Yeah, so that's how bad it gets. And for financial institutions, it is for their own benefit to have knowledgeable customers to create sustainable financial systems. Otherwise, they'll just be coming up each and every day chasing interest rates and high returns. And we've seen that such organizations, they don't last long. And I usually tell people that finance is not romance, finance is boring. So the boring institutions, they're the ones who usually tend to survive in the long run. And they're very cautious. They try to ensure that their customers know the different products that are around, so that it can be a self-managing ecosystem. Because if you just go with interest rates giving high returns, then when something like COVID happens, you'll be exposed. And usually say that actually a defensive strategy as an institution is the offensive strategy in the long run, because when things like COVID come, they'll find you when you're well grounded and resilient. So it is very important for them to be contributing to financial literacy of the environment that we are in. So that's very, very important for them and for the government, because like now when you have these social programs like helping the senior citizens with 2,000 Kenya shillings per month, that is something that would have been avoided if the government could have taught them about financial awareness. So actually the government will have these social programs that ideally would be unnecessary if people were educated. Yeah.
I love that. I think you've literally hit the hammer on the nail. There's nothing else to add on that topic. I believe you've completely covered that, because it's important, and these institutions have a responsibility, governments have a responsibility, we have a responsibility. And part of the reason why we're doing this, why Arielle for Africa is having these conversations, why we have a financial literacy program, is to actually take up responsibility that we feel has been left to the wayside. Again, we're very excited to see your comments and everything that you have to say. Please send them in and we will share them. I think I'll point to this one. Thank you very much, Terence. You are literally saying the truth. This is accurate. But now that we're talking about financial literacy, something that has been found is financial literacy for women in particular is a bigger issue or point of concern than financial literacy for men. And so I'm going to pull up the only female panelist we have today, Gladys, to tell us why are women financial literacy levels lower than for men? What is happening?
So thank you very much. So first of all, we are in Africa. And we know that in African setting, who is a woman in an African setting? In many cases, a woman in an African setting will not even own properties. And we know that. So a woman in an African setting will not even be in a position to say, let me take an education policy for my child. Who takes the education policy? The child bears the name of the man. So look at how the woman has not been exposed to financial literacy. So they're just lagging behind. So and I think that is first of all the major reason, our culture. We're looking at our culture because we come from different cultures, yeah? And you're going to realize that if you do it on culture basis, you're going to realize some cultures lag behind more than others. So women are not well informed about the avenues that are there for them even to go and invest. They're not so aware. Number two, in many cases, women are just house helps. No, not house helps. They're housewives, yeah, in many cases. So they don't even have a chance even to go and work. So number three, even look at women in how they acquire even jobs in Africa. So we want to elect a president woman in Africa. What do they say? They are going to lead us nowhere. So in many cases, a woman is looked down upon, and therefore that is the reason as to why they do not have this issue of financial literacy. So the only thing that women do in Africa is what we refer as merry-go-round. So just pull resources together, but not even when they pull resources together, even they don't know actually what do they need to do the resources. So someone is given their portion and just go and invest it the way they want. Why? Because nobody sat them down to tell them how can they invest the cash. So let me give an example of one group of women that I know around my place. So these women went ahead and they were donated a cooker and I think a machine that does peanut butter. So those were two things that were donated. So when these women were given these two items, they were told, go make peanut butter, go bake cakes. So they started very well, but the issue that they had, number one, is even how to go and market the product. So because they were just told, go and bake, go and do this, but they were never informed or they were never trained. They were never impacted with the knowledge on how to market. And then number two, how to invest what they get from them. And actually, what I can say is that they did it for a very short time and they were unable to do it anymore. So in many cases, women are not well informed. Number three, another thing is also the income levels. In many cases, women are not earning like men earn. And therefore, if they don't have the avenue on how to earn at least good amount of money, then you see at the end of the day, they might not have to go and invest the little that they have. What they do is just spend it, and that is it. Yes.
I like that. I really like that. I think that really summarizes it and really wraps it up that women have not been given the opportunities that they should be given. They've not been put in spaces where really they have to manage their own finances and manage investments, manage property. And I think this is something that needs to change, right? This is a trend that needs to be reversed. We need to have more women in spaces where they are in charge of finances, they're in charge of their own money, they're in charge of family money management, because a lot of the times, and you'll find this, women tend to be more risk averse. They tend to hedge more against possible risks and just be generally careful with their money management. And so now I'm just going to begin to wrap this up. If you have any last minute questions, do send them in. And I think I'm going to begin with Amanuel. And we have a question here. So I want you to answer this question first, and then I'll ask my question. When did you become financially aware? What had to happen in order for you to become an authority in this area of financial literacy? So when did you become financially aware, and what had to become what had to happen for you to become a say-so person in this space?
Yeah, just when it comes to financial to the finance, it's a broad concept, and the longest game that we play is the money game.
Yeah.
But we are not aware about that. So after my arrival in this country, as I told you, it was a kind of there was a question to me, because people try to not to work longest hours because they think that there is a huge amount of taxation that need to be paid. So they limit themselves to minimum, just regular working hours. And by the other side, you see some people just generate wealth by simply moving money from one portfolio to another. So when it comes to finance, you have to be aware of how the money works based on the interest rates that you generate, which is the secret point, that is the internal rate of return, and the other part of it is the taxation. So on my way to search for opportunities, I was in investment workshop. At that time, one mentioned it. We have 4 giants to mention. I mean to face. We have 4 giants. The first one is the producers and service providers. Every year they bring you some features that you need to buy. The other thing is the advertising agents. They advertise everything based on the holidays or something like that. The other is the media. They help them that advertise just so many holidays, the President's Day, something like that. Every quarter, Women's Day, Father's Day, something like that. So there is a kind of mass advertisement, and the financial institution supports that by giving you low financing, just no credit score asked, or just no down payment required, or just financing available. So these 4 giants are pushing for consumption, and the investors are aware of this, and they are away from that. And there is also other concepts that use other people's money. In America, the investors or the wealthy people, they don't spend their money. They don't use their money when they invest. They use our money. So that created me, because that person, she was saying she have never used her money just investing in the economy in different parts of the real estate. How it comes. So just that we give our money to the bank. The bank lends it to others so they can make money, and the others, they use our money, and just they benefit from that. So there is a concept of using other people's money. And with that in mind, if you know about how the money works, and if you are aware about the interest rates that you can generate and how it affects your either debt or your investment, is going to be against you if you don't know it. And you are going to use it if you know about how it works. So one mentioned about the compounding interest effect, and when I learned this one, I just realized that people are missing, because me and Edith having the same income, the same loan, the same, just everything the same. Just you can make a difference of 6 figures just by following one information or one guideline. And I felt trapped, or I stay trapped, just paying my mortgages without doing that one. Just apply one information without any cost makes a difference in America. So after that, I just start to realize that we need to work on money. We have to make our people, we are hard workers as Africans. You know, we are hard workers. We work so many hours. Then if we put that knowledge with what we have, then we can make a difference. That's my awareness, and it's after my arrival. But if we go back to home, we don't have that opportunity because our financial institutions are still limited to the money exchanging system. We don't have even the check system or other ATMs. If you come back to Eritrea and other parts of the Africa. So my awareness starts here in America, and now I really know how money works, and I can give advice. I can use it for myself and my community, so that we can make difference in the next few years.
Yeah, I appreciate that. Thank you so much, Amanuel. If you had to leave people with one piece of advice when it comes to how they manage their finances or their financial literacy or grow their investment, what would that piece of advice be?
Just my piece of advice is financial independence starts from your mindset. As Robert said, we have to have the courage to talk about money. To ask about money, and to discuss about money. Never be frustrated to talk about your money because you are investing it, or you are just paying money. So it starts from the mindset, and there is just a way that starting from the mindset, if you are ready to think about your money, the cash flow should be taken into consideration. That if you have enough cash flow, that's okay, but you have to work on it. The other thing is about saving. The idea of pay yourself first is going to be the main thing that makes you free financially. So we have to know what paying yourself means. Then after that, the money should be grown, because we cannot keep our money in our home or anything else. We have to invest it. When you grow money, just know those 3 rules of money: how it grows, just exponentially, the effect of compounding interest. The other thing is the markets. Most of the Africans, they need shortcuts so that they go to the financial markets, which is the stock market, unpredictable, which is variable thing. So they lose money, and that's going to be the end of their life. So know how the money works, and just my piece of advice. The next thing I need to mention is know about how the tax codes work on your on your respective countries, so that you can have enough knowledge to minimize the tax burden or take tax advantages.
Yeah.
So but more importantly, we are good in academic and professional education. So my advice to my African fellows is just add that educational, the financial education, to your profession, so that you can be free and help your people. Unless you do that, just going after the degrees and certificates doesn't make sense. As education is good, but consider your time taking so many certificates for so many years, then going after that, after graduation, paying the student loan. The other thing is buying luxury home and luxury cars, so that you stay paying and feel comfortable staying for different hours. So I will come back to that, the concept of compounding interest. It gives you certain amount of possibility that how many doubles do I have when I invest my money in my life. So if you are missing about 20 years, just getting the PhD or other certificates and then paying the loan and the mortgage, about 20 years, we are missing the time. It's not about only the money. So consider how the money works and the effect of the compound interest. And I can share you so many things. If you live in the United States, we can get connected and we can share each other. But the secret is in the books. Just read them and apply them. That's my advice.
I love it. Again, for all of our speakers, their profile details are all over our platforms, and you can always go and reach out to them on LinkedIn. For example, Amanuel is very responsive. So like he said, especially if you're abroad in the United States, do reach out to him for more on that. There are some interesting comments that are coming in, right? I would not have put my money as well on Botswana leading in financial literacy. Thank you so much, Edna, for your beautiful comment. Exactly. As women, we do not want to keep this trend going. We want to reverse every single thing to allow for greater financial literacy amongst women in the future. Now, again, as we close off, I will just ask Robert. So what do we do going forward, Robert? How do we improve financial literacy and inclusion in the continent?
First, I would say that there are two types of capital that you need to have, because those two types of capitals are what will generate the financial capital. And sometimes we take them for granted. So I would say that first, we should know that you have to be good at something, have some special skill. So this is known as mental capital. So you are able to do something. Maybe you are a fundi, you are an educator, you are a banker, or you are a footballer. So there's something that you do extraordinarily well. And the second thing is social or relationship capital. Once you know it, no one stays in your head or no one stays in your laptop where your CV is. Get it out there, let your family members, let your friend, let organizations know what you are good at. Because it is people who will connect you to opportunities. So these days you have even social media and platform, LinkedIn. Let people know that you are so good at this. We've seen cases whereby someone like Muhammad Hassi, who advertises for people online, he says that so-and-so is good at this, and so many people end up buying it. That is relationship and social capital. So once these two interact is when you can earn money. So it's very important that you specialize in something and let people know that you're good at it. Once you earn the money, know that it is a journey. So Emmanuel has said that you set aside part of your income. That is very important, and it is a meeting that you have with yourself. And we usually say that personal finance is very personal, and no one else can guide you on that. You are the professional of your personal finances. We can just share ideas, but you have to make that decision. So when starting, by setting aside part of your income, we should know that this income should be put in an investment or saving plan that gives you returns above the inflation rate. So you are just getting started. So the first thing you need to know is to be defensive. Play defensive. It is always good to have a well-grounded foundation. So be defensive and be consistent, and put aside some money in terms of emergency fund, because we for sure know that it is going to rain in the days to come. We just don't know which day. It might be cold. Yeah. So after that, have some level of abundance or luxury. We call it aging your money. So after saving, like let's say about 6 months worth of your monthly expenses, you can extend it to 2 or 3, so that you can even use October's salary to pay for this month's rent if you are paying rent. So that is aging your money. It is good if your money is old. The money that is very new is not good. The one that you are waiting for to come now so that you can buy some dinner or supper, no, that money is not good. It will give you a lot of stress. Then after you've saved consistently, you now need to start thinking of investing to accelerate your wealth creation. So it has to be a journey, and you have to do it step by step, and be in charge, be a driver. Because if you are not in charge, we have so many distractions like betting, mobile loans, IOPs, which are basically impressing other people, and other people will take charge of your finances. They'll create some sense of guilt in you, so you'll just be like a walking ATM. So you need to be in charge and look at your short-term and long-term goals and decide on what to prioritize.
Thank you, Robert. Thank you for that and for your contribution. I feel like it has been very insightful and has actually given people tips. So I'm not even going to ask you for advice, because you've given us advice already based on the things that you've asked us to do. So thank you very much. As we close this off, I would like to ask Gladys for her last pieces of advice for for all of us, right? On how to manage our finances and improve our financial literacy whilst also growing our investments.
Okay, thank you. Thank you, Edith. So first of all, let me say that if you do not know, you need to ask. In many cases, the reason why even we miss the direction of where we are going is because we are not even asking.
Yeah.
Number two, there's so much information nowadays online. So many studies have been done online. So let us go and seek for knowledge on how to be financially literate, whether from the financial institutions, whether from the learning institutions, whether we are going to do it online, from the books. Let us go ahead and do that. So we cannot walk blindly when it comes to issues finances because we do not want to burn our fingers.
Oh, yeah.
So you can just not take a loan and say, I don't know where to invest. And you took the loan. Why did you take it in the first place? So seek for advice. Number two, to the young generation, you can start small. So do not sit back and start looking like you can climb, you can jump at the top of the tree. It has never happened. So you need to start climbing the tree slowly and slowly so that you can get to the top. So first of all, to the young generation, especially those ones in the university. In many cases, the young generation, you are given cash by your parents. And this cash you are given is for transport. And sometimes you are given even more than you can handle. Yeah? For example, maybe you are given $10 in a day and you just need $5 in a day. So what do you do with the other $5? I usually ask my students in many cases, can you look for a way of investing that excess that you have? And in many cases, I've even called in the people from the insurance companies, financial institutions, stock market, cooperatives, so that they can be advised more from the specialists or from the companies on how to invest. So go and think on how you can invest that extra coin that you have been given as transport, but you are not fully using it. Target on daily basis. Can I invest $5 in a day? So if you invest $5 in a day times the 40 weeks you are in the university, look at it after you are done. You'll have sufficient cash even to go and start your own business. So it's not a must that we are all going to the employment. It's not necessarily. And again, it is not a must. What we do is just get knowledge so that we know the direction of where we are headed to. We don't get knowledge so that we get employment. Just have the knowledge to know the direction that you're supposed to be headed to. So the young generation, I encourage you to start small. Do not sit back and say, this is too small. This I cannot take this. I cannot start from here because you come from this background, so and so. So let us not have that mentality. Let us have the attitude and the mindset that you can be financially literate. Not because you have the money, not because you have the education, but because you have the mindset that you can be able to achieve it. So please go ahead and do it. And believe me or not, after 4 years of your university, you not walk out there looking for a job. You walk out there being big, and again, having started small, and there you are now there at the top. So thank you.
I love it. I love it. I think we've had such amazing insights today, and we honestly, even I have learned so much from the amazing panelists. I just want to say thank you to them for their time and for just allowing us to have this space where we can actually learn from them, from their experiences. And I think I just want to say again, a really, really big thank you. And as we close it off, this is not the end. We have part 2 of this series. So join us on the 6th of January as we discuss how to stay financially afloat in a pandemic. What do we actually need to do in order to manage our money, to do well, or not just to survive, but to actually do well in a pandemic? And you can register for that. Again, there are links below for that. So please feel free to register again for free. And then also we have our financial literacy program. More details on that also in the description, be it on Facebook or also on YouTube. You can find the links to learn more about that. We begin in February of 2021, where we actually have tangible discussions on creating a savings plan specifically for you, creating a debt management plan specifically for you, an investment plan for you, a budget for you. Everything will be done on a one-to-one basis. So feel free to read more about that again on our website. There is a link below for that. And just in case, right? Just in case you're an entrepreneur, you have a team, you have a business, do check out our Future Ready Incubator, which will allow teams to go through a 6-week journey with us, at the end of which they'll have 5-year support from Arielle for Africa, funding support, legal support, and partnerships that they need to get launched and started in the African market. Again, as always, follow us for more. Our Facebook handle, Instagram, Twitter, and LinkedIn are all available on the screen. Feel free to follow us on all of these platforms, whatever is most convenient for you. Again, we are so thankful and grateful to have you on board. Yes, thank you, everyone. I can see you in the comments. Thank you, thank you, thank you for joining us, for being here with us. We are so grateful. And thank you again also to our amazing, amazing speakers. That is all for today. Do join us next time. I'm sorry we ran over a little bit, but that was Arielle for Africa, and that was the Money Check webinar series for you. Do join us next time. Bye-bye.